Hello, I'm Martin Buchholz from ACI. Thank you for joining us today for our webinar on the Global Rise of Smartphonatics, Driving Mobile Payments and Banking Adoption in the Americas, EMEA, and Asia Pacific. Today we will cover the following agenda. We'll first go through our research approach, and then the core of the webinar this morning will be the Global Rise of Smartphonatics, Asia Pacific. Then there'll be a short section on ACI Worldwide, and we'll end up with our questions and answers. As you know, ACI powers electronic payments for financial institutions, processors, and retailers around the globe. Mobile is one of the hottest areas in the payments and banking today. But despite the fact that we see mobility everywhere, we felt that there was not a lot of data on our mobile customers. Across the industry, we found that there is an inconsistent understanding of these consumers, what they are doing, what they look like in different countries, how they prefer to shop or transact, and how they shape the future of banking and payments over the next 5 years. So we decided to conduct a research earlier this year with a survey in 14 countries to learn about the consumers' adoption in the new methods of banking and payments, both to help inform our mobile product design as well and also to help advise customers on their mobile deployments. We partner with the IT group to help us give context to the survey, what it all means to the industry, and what our customers should do to make sure that they are making the most of mobile banking and mobile payments. I'd like to introduce Ron Sutherland, Senior Analyst from the IT group, who will take us through the results of the study. Ron?
Thank you, Martin. I appreciate the introduction. Thank you for giving me this opportunity to present today. I'd also like to thank everybody who's attending for taking time out of their day to join us on this webinar and give us a chance to present some of the research and findings, and give us an opportunity to tell you a little about what we think the drive of the Smartphonatics and the adoption of mobile payments and mobile banking will mean to financial institutions and to retailers and merchants. It's certainly a very timely time to do research in the field of mobile payments, considering the adoption of mobile payments across the globe in many different countries. As Martin indicated, the research that ACI conducted looked at 14 specific countries, and what we found in every one of those countries was a varying degree of adoption of both mobile payments and mobile banking, and also very importantly, mobile commerce, mobile shopping, and not just e-commerce, but using mobile device to change the way consumers are shopping for goods today. What we found in terms of the research was that the number of people who have used a mobile phone to make a payment in the past 6 months, or the 6 months leading up to the survey, which was conducted in Q2 of this year, varies very widely across the 14 countries. In countries like China and India, nearly 2/3 of the consumers that we surveyed had made a mobile payment in the past 6 months. Upwards of almost half of the consumers in South Africa, the United Arab Emirates, and Singapore had made a mobile payment. Roughly 1/3 or a little bit more in Brazil have made payments using mobile devices. And then in countries like the U.S., the European countries, and in Canada, the numbers are slightly lower based on many different things, especially the adoption of smartphones as well as the infrastructure in many of these countries. The research, though, importantly, looked beyond just the behaviors of consumers, and one of the things we were really looking to understand were what were consumers' attitudes and beliefs and intentions regarding mobile payments, mobile banking, and really the mobile channel as a whole. And we found some very interesting findings in terms of consumers' beliefs and attitudes towards the mobile channel. Regardless of where countries were today in terms of the percentage of people that had used their mobile phone to make a payment, we actually found that that didn't necessarily correlate to the percentage of people who believe that making mobile payments is very important to them. In India, the percentages are roughly the same, but in South Africa, we actually found a higher percentage of folks who believe that making mobile payments is more important to them. Brazil, that number was fairly consistent, but to a certain extent, there's moderate levels of importance of mobile payments to consumers in the 14 different countries we looked at. Another important attitude, though, that we captured was the importance of the digital or the mobile wallet. And across many of the countries that we studied, we actually found a much higher level of interest among consumers in having a mobile device replace the payment cards that they make today. In India, it was just over 8 out of 10 consumers, nearly 3/4 in China and Brazil, a little over 7 out of 10 in Italy and South Africa. 2/3 of the consumers in Singapore and United Arab Emirates are looking to use mobile phone or mobile device to replace their payment cards. And even in the countries where the current adoption of mobile payments was very low, especially in Europe and in Canada, we found significantly higher percentage of people who expressed this interest in a mobile wallet or a digital wallet capability. So what we found is that you can't just simply look at the current behavior because that's so dependent on a lot of technical infrastructure and point-of-sale technology today. But what we really believe is we found a pent-up demand and interest for mobile payments, mobile banking, and mobile commerce in many of the countries studied. Most importantly, though, was when we combined these two attitudes, the interest levels in mobile payments and the interest in a mobile wallet, and found that across the 14 countries we looked at, about 1 in 4 consumers said that they were very interested in mobile wallets and believed that mobile payments would be very important to them. And we ended up labeling this group of consumers the smart fanatics. And a lot of what I'm going to tell you today is going to focus a lot on who these smart fanatics are and, very importantly, how they differ from the rest of the population in each of the countries that we looked at, specifically in the Asia-Pacific region. Beyond just the attitudes, though, so what we find here, before I get into the behaviors, is the adoption of or the penetration of smart fanatics by country varies very widely country by country. In India, we categorized about 60% of the adults in India as a smart fanatic, meaning that they expressed a very high level of interest in a mobile wallet and believed that mobile payments were very important to them. Followed by South Africa, where just over 4 out of 10 consumers were categorized as smart fanatics, 37% in Brazil. In Singapore, it was about 1 in 4 consumers, and in Australia, about 15% of adults were categorized as smart fanatics based on their attitudes towards mobile payments and mobile wallets. But beyond the attitudes, what also categorizes a smart fanatic are their behaviors. The smart fanatic is the person who's very likely to already be doing some sort of mobile banking. They probably are using their smartphone instead of using cards or cash today. They're specifically using their smartphone to pay for certain types of items like groceries or airline flights. But I think most importantly, what really categorizes the smart fanatic are people who have changed their mobile banking, shopping, and payments behavior as a result of owning a smartphone or the desire to own a smartphone. Now, I've asked this question here in more of a research kind of a context, are you a smart fanatic, to indicate the behaviors. But I actually would like to ask all of you who are attending today, do you consider yourself a smart fanatic? Based on the criteria that we've established here in terms of interest in mobile wallets and the importance of mobile payments to you, would you consider yourself to be a smart fanatic? You can see the poll question. I see it on the right-hand side of my slide. I don't know if you see it in the same place in yours. But if you would just indicate whether or not you are a smart fanatic. I actually think we'll probably find a pretty high percentage across the 14 countries we looked at. As I mentioned before, we found that about 1 out of 4 consumers across the 14 countries were categorized as a smart fanatic. I think given the Asia-Pacific focus we have of the attendees today, and the fact that probably many of you, by virtue of participating in this webinar, are probably smartphone owners, we'll probably find a bit higher percentage, and there we are. It's we did a webinar this morning with North America attendees. The percentage there was just over 40% who said they're smart fanatics, and what we have here is that 2/3 of you say that you are smart fanatics. So I'm dealing with a pretty sophisticated group here who I think kind of get it in terms of mobile payments and mobile banking, and I think we'll understand where we're going with this webinar. In fact, this is probably, given that 2/3 of you are smart fanatics, you probably relate to this picture. This is probably what many smart fanatics do every morning, sit there at their breakfast table, pecking away at their iPads. I'm not sure if you can clearly see the guys on the right, what his iPad looks like, so let me just blow that up for you a little bit. And there you have the smart fanatics typical type of conversation. They don't talk anymore. It's all about texting and tweeting and Facebook posting, and really getting into the mobile channel. But all joking aside here, the key message I really want to get across to you today is that not just in Asia Pacific, but across every one of the countries we've looked at, it's going to be the smart fanatics who will lead the demand for mobile payments and mobile commerce. I'm going to focus specifically on the Asia Pacific countries, but I want you to know that everything I'm going to show you today in terms of the differences between smart fanatics and other consumers in the various countries is, while the numbers change from country to country, the trends and the patterns are so amazingly consistent across the 14 countries that I can make this conclusion that it will be smart fanatics who lead the demand for mobile payments and mobile commerce in country after country. Now, to help me kind of build this theme and play it out, what I'm going to do over the next 25, 30 minutes or so is address and try to answer 3 specific questions. First, I'd like to give you a little bit more detail about who are the smart fanatics, tell you a little bit more about their demographics and some of their behaviors. But the core of this is really going to focus on how they are different from other consumers in each of the countries we've looked at, and specifically highlight some of those key points of differentiation. And then I'd kind of like to bring it all together and talk about what the rise of smart fanatic means to banks and retailers. So we look at this country by country. In Australia, where we found that just 16% of Australians were categorized as smart fanatics. That's predominantly because the interest in mobile wallets was generally low. Well, you can see here 35% of Australians expressed an interest in mobile wallets. A little bit split between those who thought mobile payments were very important and those that did not consider mobile payments very important. But really what's driving the low levels of smart fanatics in Australia is that 6 out of 10 consumers in Australia are basically saying that they're not particularly interested in mobile wallets and not particularly interested in making mobile payments. The picture is very different as we move to China, where 31% of consumers there were categorized as smart fanatics, and in fact, 3/4 expressed an interest in mobile wallets. Only 16% of the Chinese consumers that we surveyed said that mobile payments and mobile wallets were not of interest to them. If we look at India, where we had the highest level of smart fanatics, we found a very high level of interest in mobile wallets. 8 out of 10 consumers expressed an interest, and 3/4 of whom it did express an interest in or the importance of mobile payments as well. So this is what's really driving these high levels of percentages. These are not necessarily all smartphone owners, by the way. They're people who say that they're very interested in having a mobile wallet capability and believe that mobile payments will be very important to them, regardless of whether or not they currently own a smartphone. In Singapore, this was a little bit closer to the overall average at about 24%, but you do see here a very high percentage of consumers who have expressed an interest in a mobile or digital wallet. The reason that there's the relatively lower level of percentage of people who were categorized as smart fanatics was the higher level of people among the people interested in mobile wallets who said that mobile payments were just not that important to them. So that's what's driving some of the categorization of smart fanatics in each of the Asia-Pacific countries. If we look at this from a demographic perspective, many of the people that I talked to about smart fanatics, I asked them to guess who do you think are the smart fanatics, and the people they typically guess are younger consumers? And that's pretty consistent with what we found across the Asia-Pacific countries. In Australia, about a quarter of Gen Yers, who we categorize as adults between the ages of about 18 and 31, about a quarter of the Australians in the Gen Y category are smart fanatics, about 1 out of 5 Gen Xers, about 1 out of 10 baby boomers, and just a handful of seniors. In China, though, where we did find a much higher percentage of smart fanatics, that's driven by the fact that more than 4 out of 10 Gen Yers in China are categorized as smart fanatics, and nearly half of the Gen Xers. The percentages significantly drop off when we get into the older segments. We're just about 1 out of 10 baby boomers, and that's not an absolute zero, but basically rounded to 0% of seniors who were categorized as smart fanatics. In India, where the population has a higher percentage of Gen Yers than in many other countries, that's part of what's driving the high categorization of smart fanatics, but also the fact that 7 out of 10 Gen Yers and Gen Xers are categorized as smart fanatics in India, about half of baby boomers and 1 out of 5 seniors. And in Singapore, numbers are a little bit closer to the Australian numbers, where 3 out of 10 Gen Yers are smart fanatics, about a quarter of Gen Xers and boomers, and basically rounding down to 0% of seniors. What it categorizes from a behavioral perspective, these smart fanatics, is these are the people who are making mobile payments in these countries. In China, nearly every person who is categorized as a smart fanatic has made a mobile payment in the past 6 months. And given that 2/3 of all consumers in China said that they had made a mobile payment, we can see that even among other consumers who were not categorized as smart fanatics, there's still a decent level, about half, who are making mobile payments already. In India, the mobile payment adoption is significantly being driven by the folks who were categorized as smart fanatics, where 83% of the smart fanatics had made a mobile payment in the past 6 months. But only 1/3 of folks who were not considered smart fanatics, and that is very consistent with the findings in Singapore. In Australia, the numbers for both segments are a bit lower, where just over half of the smart fanatics had made a mobile payment in the past 6 months, and only 15% of other consumers. It's not just the mobile payment behavior that categorizes the smart fanatics, it's also that these are the folks who are doing mobile banking today. And in India, China, and Singapore, where overall mobile banking adoption is very high, practically every one of the smart fanatics that we surveyed is already using a mobile device to do their banking. But even among other consumers in India, China, and Singapore, those adoption percentages are very high. The one outlier in the Asia-Pacific region being Australia. But these are just some of the demographics and overall behaviors that categorize the smart fanatics and other consumers. There are 3 things that I really want to point to here that I think are most important in terms of understanding the differences between smart fanatics and other consumers in each of these countries. And these are the reasons that I think really point to why it's so important to understand the rise of smart fanatics in country after country. There are 3 things in particular that I'm going to highlight here. The first is the differences in how smart fanatics pay for the things they pay for. And one of the ways we could look at that is in terms of how they even make mobile payments themselves. In many of the countries, we ask consumers, by which methods did you make mobile purchases if you made a mobile purchase? In Australia, we actually did not find significant differences between the smart fanatics and other consumers. About half of each group have used either PayPal or some other app on their smartphone to make a mobile purchase. A slightly higher percentage in both categories that used their phone's web browser. A little bit of a drop-off there, but not significantly differences in percentages of those that use text or SMS capabilities. The numbers drop off in terms of using a contactless method in Australia, and again, very few who said that they use some other type of method. But in China, we did find some differences, probably driven here by the smartphone adoption, of why nearly 6 out of 10 smart fanatics had used a PayPal or other app to make a mobile payment, but also see very high usage of the mobile phone, the mobile's web browser, but also, especially compared to Australia, higher adoption of both text and SMS and contactless methods. In India, the use of apps was slightly lower than it was in China, but again, very high in terms of using the phone's web browser and also text and SMS messaging in India, and 15% among the smart fanatics would use contactless. In Singapore, 3/4 of the smart fanatics had used an app versus a little over half of the other consumers. Many from both categories are using their phone's web browser. Also, many of them using text SMS capabilities. Two key things to kind of take away from this is, I think clearly the higher percentage of adoption or usage of PayPal or other apps is partly driven by the adoption of smartphones among the smart fanatics. But the other key takeaway here is that across the board, and especially among the smart fanatics, they are using multiple methods to make mobile purchases when they do. They're not just relying on a single method. Whatever is probably most convenient to them when they're making a purchase. This has important ramifications for both financial institutions and retailers in terms of the types of mobile payment capabilities that they support. We find is that the smart fanatics in particular are using multiple payment methods. Now, despite the fact that they're using these multiple payment methods, this does not exactly translate into the fact that they necessarily prefer to use the mobile phone when making various types of payments. Looking specifically at person-to-person or P2P payments, you find, though, that this is fairly consistent, not just across the countries in Asia Pacific, but across all the countries we looked at, is that the smart fanatics express a greater level of interest in preferring to use a mobile device when making various types of payments, whether it's for low-item goods, big-ticket goods, or in the case we're showing here in terms of P2P payments, where in China, nearly 1 out of 4 smart fanatics say that they prefer to use the mobile device when making a P2P payment, a bit lower in India, Singapore, and Australia. But again, the smart fanatics are clearly the ones who are leading the way in preferring to use a mobile device in making P2P payments. But also, it's the smart fanatics who are leading the charge away from the use of cash. We asked consumers, and I'll show you some of the detail in a minute here, but we asked them specifically about how their payment preferences have changed over the past 3 years. Among smart fanatics, there was a 34% drop in consumers' preference for paying with cash for low-value goods, significantly higher than the drop in preferences among other consumers. In Singapore, it was a 21% drop. In Australia, even an 18% drop among smart fanatics, significantly higher than the drop in the preference for cash among other consumers in those 3 countries. The one outlier here being India, where there was a relatively low change in preference for cash, and there was a relatively equal change between the smart fanatics and other consumers. But to get into some of the detail here, country by country, what I really want you to focus on here is, first of all, is how the preferences for cash is, number one, lower among smart fanatics even to begin with 3 years ago, and how the change in cash is significantly greater among the smart fanatics than other consumers. So for low-value goods, 3 years ago, nearly 3/4 of the people we categorize as smart fanatics said that they prefer to pay for low-value goods with cash. Today, that percentage has dropped to 50%. There's also been a huge change in their preference for paying with a debit card from 10% down to 1%. And what's making up that change is the shift in preference to using a credit card from 9% to 21%, and a doubling in the preference for using a mobile phone from 7% to 14%. Among other consumers in Australia, though, 3 years ago, there was a very high preference for cash, 86%. There has been a drop, but not nearly as big a drop as among the smart fanatics. That drop has basically been made up by the change in preference for credit cards, and 1% who said that they now have a preference for a prepaid card. Very different numbers, but somewhat similar pattern as we look at the other countries, specifically in China, where among smart fanatics, 3 years ago, more than half of them said they prefer to pay with cash. Today, that preference is down to almost 1 in 5 consumers. Again, like in Australia, a decline in the preference for using debit cards, with a shift among the smart fanatics preferring to use a slight increase in those that prefer to use a credit card. The big change, of course, coming here in terms of the percentages who say that even today they prefer to use a mobile device to pay for low-value goods. Among other consumers that were not categorized as smart fanatics, yes, there is a fairly significant drop in the preference for cash, but even today, practically twice as many other consumers prefer to use cash for low-value goods than among smart fanatics. There's been a slight increase in the other consumers' preferences for debit cards, more significant increase in credit cards. And it's not that other consumers don't have a preference or express a preference for using a mobile device, but the numbers are nowhere close to what they are among the smart fanatics. In India, very similar pattern again, a drop in preferences for cash among the smart fanatics from 60% down to 50% among other consumers, where the percentage change was very similar, but we did start out at a different starting point, where 3 years ago nearly 80% of other consumers expressed an interest for cash. Today that preference is down to 2/3 among other consumers in India. An increase slightly among smart fanatics in the preferences for debit cards, but among other consumers, that's where the shift has occurred, was from cash to debit cards. Among the smart fanatics, that drop in cash has really been seen in a preference for using the mobile device. And finally, in Singapore, once again, big drop in preferences for cash among smart fanatics from 63 down to 42%, a 10% drop among other consumers, but again, starting from a higher starting point. And again, from the smart fanatics, similar to what we found in China, the big difference here being made up by the changes in the preference for a mobile phone. We did see some pretty significant change in terms of the preferences for using a mobile phone among other consumers, but again, just from 1% to 7%. So it's not like other consumers that we didn't categorize as smart fanatics don't make mobile payments or don't want to make mobile payments. They just don't express the level of interest in making mobile payments. It's not as important to them, and they don't express that level of interest in the digital wallets. And one of the reasons why they may be expressing this interest in mobile wallets can be seen in smart fanatics mobile shopping preferences. Now, for this section of the presentation, I have to admit that I have to cheat a little bit. And I have to share with you some research that is specific to U.S. consumers. The firm I work for, IT Group, recently conducted a survey of a little over 1,000 consumers in the U.S., and we replicated the methodology that ACI used, that we employed to identify the smart fanatics by asking them about the importance of mobile payments and their interest in mobile wallets, so that we could identify the smart fanatics in the news sample. But we asked a number of different questions in the follow-up survey that got at their mobile shopping preferences. And although these numbers that I'm going to show you are specific to U.S. consumers, I do believe they're pretty relevant, because what I'm hoping you're picking up here is, though, that although the percentages tend to change from country to country when we look at the differences between smart fanatics and other consumers, the patterns in terms of the differences are remarkably similar. And although these numbers are specific, that I'm going to show you here, are specific to the United States, I do believe that while the numbers would change if we looked at other countries, I believe the differences that we find between the smart fanatics and other consumers in the U.S. Would hold true if we looked at and replicated this among other countries. So one of the first things we found in looking at mobile shopping preferences between smart fanatics and other consumers has to do with their mobile researching preferences and the capabilities that they're looking for. Nearly half of the smart fanatics that we surveyed said that it's very important for them to have a mobile capability to research products online, whether from home or work. A slightly smaller percentage, about 4 in 10, said that not only is it important to have a mobile capability to research, but to have that capability while they're in a store in order to purchase online, as well as to research products online while they're in a store in order to purchase in the store. Among other consumers, the percentages of people who expressed an interest in a mobile capability is far lower. Less than 1 out of 5 want to even do that from home or at work. Not even 10% want to do that in a store to purchase online, and just 10% of other consumers expressed an interest in doing that in order to purchase in a store. And what should probably be fairly scary to many retailers and merchants is that 36% of smart fanatics say that it's very important to them to have a mobile capability to research products online while in a store in order to purchase from a different merchant. And by and large, consumers who are not smart fanatics really don't express much of an interest in this at all. But again, it's the differences here in the smart fanatics and other consumers. It's simply that the smart fanatics are leading the way in terms of the demand for these capabilities, not just in mobile researching, but in mobile shopping as well. What's important to these folks, and actually it's important to most people, whether they're smart fanatics or not, is finding the best prices, whether it's deep discounts, getting relevant offers, getting offers from the stores that they shop at most, and getting offers from companies that they know and trust. But what I'd like you to focus on here are the last 2 items, because I think the differences between the smart fanatics and other consumers in these last 2 items is particularly important. Smart fanatics want mobile shopping capabilities offered to them by their primary financial institution. Nearly 3/4 said that versus just less than half of other consumers. They also want this connected to the social networks that they use. 60% of the smart fanatics expressed this interest, that said it's very important to them. Only about 1/4 of other consumers said that they wanted that capability. And really what we found, at least in the U.S., and you can tell me better whether or not this plays out in the Asia-Pacific countries, but here in the U.S., the smart fanatics express a much greater level of interest in getting daily deal offers from their primary bank, where 7 out of 10 smart fanatics expressed an interest in this versus just less than 4 out of 10 other consumers. And it's good news for the banks who are looking to offer daily deal type of offerings, because the smart fanatics, the people that who are looking to banks to provide those capabilities, are also the most active users of these daily deals. In 2011, smart fanatics averaged about 9 daily deal purchases throughout the year, almost 3 times as many as other consumers, and spent twice as much on daily deals as other consumers did. So as we see this daily deal phenomenon taking root in country after country, we do believe there's a big opportunity here for banks to get into this, especially with this particular segment of consumers. The third and final category or area that I want to focus on that differentiates the smart fanatics from other consumers is the impact that loyalty programs have on their relationship with retailers and merchants. You know, by and large, I have a picture that I think categorizes the average consumer. And that would be her over there on the right. The average consumer, and that's the average retailer or merchant on the left-hand side there. And I look at this picture and I see this woman walking down the street with her boyfriend. And if you think of this as the average consumer on the right and the average retailer and merchant on the left, you know, this would look like it's a nice, cozy relationship. They have their arms around each other. This consumer would seem to be quite satisfied with her boyfriend, or if it's a consumer, the retailer or merchant that she does business with. But the reality is that for most consumers, being satisfied with the retailers and merchants they do business with doesn't stop them from being disloyal to retailers and merchants, as well as the financial institutions that they do business with. But we do find a little bit of a different pattern among smart fanatics, especially in terms of their relationship with retailers and merchants through loyalty programs. In each of the countries we've looked at, what we found was that among smart fanatics, a significantly higher percentage of smart fanatics than other consumers said that they always try to choose retailers of whose loyalty programs they belong to. Almost 6 out of 10 of the smart fanatics in India said that, versus just over 1/4 of other consumers. The numbers were a little bit closer in Singapore, but still differences here where almost half of the smart fanatics indicated that they always try to do business with the the retailers whose programs they belong to, just a little over a third of other consumers. In China and in Australia, the differences were a bit more pronounced, where almost half of the smart fanatics in both of those two countries said that they always try to choose retailers whose loyalty programs they belong to, and less than 1 out of 5 of other consumers. It's not just the being loyal to the programs, it's the benefits that they get from these programs as well that distinguish and differentiate the smart fanatics. Very consistently, again, across each of the 4 Asia-Pacific countries that we looked at, the smart fanatics were a whole lot more likely to say that that the loyalty programs they belong to deliver benefits that are very important to them. And we see this difference between smart fanatics and other consumers in India, China, Singapore, and Australia as well. So really what the picture I'm trying to paint here is that across the board, especially in the Asia-Pacific countries, but in all the countries we looked at, it's going to be smart fanatics who are leading the demand for mobile payments as well as mobile commerce. And these are consumers who are really kind of driving retailers, merchants, and financial institutions to build and deliver the new capabilities in these areas. So what I'd like to do is just kind of wrap up here and share with you some of the 3 conclusions or 3 major thoughts in terms of what I think this research means to retailers, merchants, and financial institutions. First of all, I think what this means is that the smart fanatics percentage represents a country's evolution towards mobile payments and commerce. I hear often when I talk to people about this research and they look at the percentages of smart fanatics across the country, and they look at the European countries and Canada in particular and call them laggards. And I really don't think of any country as being a laggard in this area. It simply, to me, is we're capturing a point in time in an evolution to a very high adoption of mobile payments, mobile banking, and mobile shopping over the next couple of years. And I just think that certain countries like India and China and Singapore and Brazil, based on and partially being driven by demographics, but also partially being driven by the state of the infrastructure and the structure of the financial services industry in each of those countries, that has just enabled a faster level of adoption of mobile payments, and partially because of the penetration of smartphones in some of these countries as well. But when we look at these percentages of smart fanatics, we're not talking about countries who are lagging. We're simply talking about countries at different points in an evolution. The second key takeaway here is that smart fanatics are the early adopters, and not just the early adopters, but they are the people who are driving demand for a new customer experience, an integrated mobile banking, mobile commerce, and mobile payment customer experience. And there's a picture I'd like to share with you that I think try to capture what this new integrated mobile experience is. It's really about answering 3 questions in a very integrated type of way. It's what can I buy? Meaning, how much money do I have in my account? What can I afford to buy? Second question is, well, what should I buy? There's a lot of different choices. I mean, consumers know what type of product they want, but they're looking to product reviews, they're looking to product descriptions, they're looking for user input and their friends' recommendations to helping them influence what they should buy. And then finally, how can I pay for it? With the burgeoning number of payment methods available to many consumers, it's no longer a foregone conclusion that they'll use cash or use the debit card they have with their account or use their primary credit card anymore. There's an opportunity to influence the choice of payment methods, and what's really going to emerge over the next couple of years is this integrated mobile experience where at the point of sale, or more importantly, at the point of decision, at the point of influence, where these mobile banking, mobile shopping, and mobile payment capabilities come together to create a new customer experience, which kind of leads me to the third and final conclusion, is that what smart fanatics are going to help drive here is a lot more integration and collaboration between financial institutions and retailers and merchants. So I appreciate your attention here. I'm going to turn things over to Martin for just a couple of minutes to talk a little bit about ACI Worldwide, and then we'll get into any questions that you might have input into the Q&A box. Martin, it's all yours. I think we have to get more.
Yes. Here I am. Yes. So to cover a little bit about ACI, I'd like to point out that these statistics that we're showing here now are actually a combination of our ACI Worldwide that we have been for a number of years, plus the acquisition from our S1. So this is a combined of the two companies. Okay. Which actually brings us up to over 3,500 employees in 35 countries around the world. In Asia Pacific, we now have over 150 customers combined. Okay, and from this, this actually has a very strong backlog, 60-month backlog of over $2.3 billion. And what's key about that is that's actually funding our R&D effort, which is over 18%. Okay. So these are our combined numbers that we have between our two companies, which is new. Okay. ACI does have a long heritage in supporting new delivery mechanisms for ATMs from ATMs all the way down to POS to online. And ACI's infrastructure is actually ready to take on new opportunities presented by the market excitement around mobile. We have some significant experience of delivering mobile solutions to our customers over the past 10 years across the customer base. Okay. With solutions already deployed in mobile banking, in mobile payments, and our soon-to-be-released mobile wallet for retailers. Our customers can take advantage of leading edge in mobile by leveraging their existing ACI infrastructure to delivery, rapid time to market results. Okay. Now I'd like to go through a couple of the cases that we have successfully delivering mobile solutions in the past from around the world. With more than 150 customers currently using our implementations of mobile products, ACI is well positioned to help customers and make the most of mobile. Examples of our current customer mobile deployments include APSA in Australia. There that they actually have implemented a person-to-person payment via mobile. APSA has extended their existing infrastructure, which is developed or based upon Base24 and Base24 EPS systems, and developed a new P2P service for payments between banked and unbanked individuals. Okay. Next example would be OTP, National Savings and Commerce Bank in Hungary. Okay. They actually have mobile fraud alerting. The OTP uses mobile fraud alerting in conjunction with our ACI Proactive Risk Manager and their Base24 infrastructure, which has resulted in one of the lowest fraud rates in the region and a solid revenue stream for their customer opt-in alerting. Recent published case studies are there also, so we can actually provide those if you ever want them. Okay. Last one there is Captiva Bank in South Africa using ACI mobile solution for consumer banking. This is through a solution that they offer the ability for customers to buy airtime and electricity via their mobile phone, which is a very common practice throughout the emerging markets. And in addition to standard mobile banking operations and SMSing alerting. So this is just a couple examples where we've actually implemented, with our customers using our existing infrastructures from ACI. So at this point in time, we'll move on to our questions and answer section. And as a reminder, the slides for this presentation will be available to all the participants, and you'll be notified by email when this is ready. So at this point of time, I will then go into some of the questions. We have a number of them here. First one here, I'll hand over to Ron. Okay, so one of the questions that we have is, are all smartphone owners smart fanatics?
Yeah, good question, and the answer to that is no, definitely not. Just because somebody owns a smartphone does not necessarily mean that they are a smart fanatic. Remember that categorization as a smart fanatic was really dependent not on the behavior or the ownership of the smartphone, but more in terms of the attitudes towards the importance of mobile payments that the respondent indicated, as well as an interest in digital wallets. I know a research sample of one is not a particularly good sample size, but what I often think about that is I looked at my wife, who has a smartphone, but is anything but a smart fanatic. She uses her smartphone to make phone calls, text my 3 daughters, but really shows very little interest in a mobile wallet. Is more than happy to pull out her card or various cards to shop. In fact, she's very willing to shop too, for that matter. But many people who have smartphones are not smart fanatics by any stretch of the imagination. And as well, although I'm sure that the percentages will vary very greatly by country, just because somebody doesn't own a smartphone does not mean they couldn't be a smart fanatic. Because if they expressed an interest in mobile wallets and an indication that mobile payments was important to them in the future, then we categorize them as a smart fanatic. They probably will at some point own a smartphone, but it's important to remember that not all smartphone owners are smart fanatics, nor do you have to have a smartphone in order to be a smart fanatic.
Okay, thank you. Here's another question for you, Ron. Does driving mobile banking adoption help to drive adoption of mobile payments?
Yeah, another good question, and I hear this a lot from a lot of bankers that I talk to, especially in North America where I'm located, especially in the U.S. and to a certain extent the Canadian banks. But I think that there is this misconception that if banks can get consumers to do mobile banking, that will lead to an interest in adoption of mobile payments. And I not only think that that's not true, I actually think it might be the other way around, or actually think that there's a wholly different driver of both mobile banking and mobile payments. Look, what people want is convenience. They want to use whatever they have available to use in front of them, whether it's a mobile device, a PC, or to talk to somebody, or a regular phone. Whichever is most convenient for them is what they want to use at the point of time where they're using something. And as I think what has come out clearly in much of the research around mobile shopping, and shopping in general, is what people are looking for are the best prices. So with the growing proliferation and prevalence of daily deal offers, with mobile coupons, merchant-funded rewards, it is going to really be, I think, the proliferation and adoption of mobile marketing capabilities that will help drive both mobile banking and mobile payments. Remember, it's that question, what should I buy? How do I look at product reviews? Well, what's the best price that I could get on this? Who has the best price? You gave me somebody sends an offer, whether it's through the bank or directly with a retailer or merchant that the customer does business with. They get a mobile coupon from that. They want to redeem that mobile coupon. They still have 2 questions they need to answer. Can I afford to pay for this? Do I have enough money in my accounts to pay for this if I don't have enough cash in my pocket? And especially among younger consumers, they don't even carry a lot of cash anymore, as we see through the preferences in cash from country to country. So can I pay for this, and how should I pay for this? And I think what will happen is through the partnerships of financial institutions and retailers and merchants, that not only will they help find the right consumers to send these messages to, but will help steer the form of payment towards a mobile device. And if anything, that mobile marketing capability, I think, is going to help drive both mobile banking and mobile payment adoption in the countries where it's not already very high.
Okay. Here's one question for me that I'll take on. And the question is fraud a factor of mobile payment adoption? Well, we always see, and the question always comes up about fraud and the risk around it, which is why with all of our solutions, we actually provide additional products or different services there. So we have our proactive risk manager for fraud detection, as well as we do fraud alerting, which was one of the examples of the opt-in service from one of our examples that we gave earlier. So yes, fraud is always a factor, which is why we see the concerns about it, and we will always provide and assist in mitigating those factors. Okay. Okay, a couple more questions here. One. While the use of mobile payments for online retailers is obvious and makes sense, do you have any research on the traditional retailers? Are there any roadblocks that are stopping them from accepting mobile payments in their brick-and-mortar stores? I'll give that one over to Ron. Is that one?
Yeah, and I think you should jump into it this morning because you may see this, especially through the relationship that you work with from an ACI perspective. But clearly on the brick-and-mortar retailer perspective, there is a point-of-sale infrastructure that I think inhibits many traditional retailers' ability to move significantly towards a mobile payment. There's also, I think, what the person who's asking the question is kind of, I think, alluding to is that, in the online space, which is happening strictly through a technology-based infrastructure and transaction. In the brick and mortar, there's often, and if not almost always, a human interface. And so for many traditional retailers, it's not just the point-of-sale infrastructure that is inhibiting a faster adoption or ability to move quicker towards mobile payments, but also an employee training challenge that many traditional brick-and-mortar retailers face.
Okay, yes, thank you for that, Ron. And you are correct in your assessment there. And what we have seen, throughout the industry too, is that when we moved into online payments, there was specific issues that were found very early on. And I believe that we have many learning cases from the fraud that was found in the original online adoption that actually slowed up the traditional retailers from accepting, this new method. So what we need to do in the mobile is that we're looking up front of what these particular issues are and trying to mitigate them before they come, because the retailers are somewhat conservative when from the experiences that they have learned on online banking in the past. Okay. The next one here I'll give over to Ron is, what kinds of banks, retailer collaborations are you envisioning in the future?
Yeah, specifically, I'm thinking of apps that financial institutions and retailers would jointly develop and market and deploy to improve the mobile shopping and mobile payments kind of capability. So apps that might kind of integrate the three questions that I posed on that slide of, getting account balances, understanding the various differences in the payments, as well as helping the consumer understand the various differences in the products and see the product reviews and do price comparisons and so forth, in a way that kind of looks at it in a more of a seamless experience kind of a way. You think about it today, a consumer who's trying to do that has to access at least two different apps or two different sites if they're doing it through a PC or through a browser type of capability, But I think where, I actually have begun to see this in a home type setting where electricity providers and other utility providers are collaborating on apps to make the home management process much more seamless. From a shopping perspective, I envision that banks and retailers would collaborate specifically on iPhone and Android type apps that would create a more seamless type of experience between the various entities.
Okay, and we have one last one here, which is, how are the security standards for handsets improving to support the concept of smartphonatics? Ron, is that?
I'm hoping you'll take that one, because I don't think I can address that.
Yes. So of course, as I mentioned before, with the online payments that we saw before in the early adoptions, in the 2000, 2001, and those years. The security standards were not up to speed at that point of time, which actually prevented the adoption, especially in the retail environment. So as we move into the smartphonatics, that is actually a key issue to make sure that we stay in front of these specific security issues. So from our experiences with ATM and POS and security standards, ACI is working very, very closely with the various security standards around the world to ensure that we continue to support them and allow the comfort factor to be there with the clients as they move forward. As you have the comfort factor with the clients, since the adoption rate of smartphonatics will improve. Okay, so if we're drawing the close right now of our time frames. So and at this point in time, I'd like to close this session. Okay, so for more information about the ACI solutions or download a copy of the Smartphonatics report, you can always visit our ACI Worldwide site, as we have listed here. Okay. And at this time, I would like to thank everybody for attending our session.